So, what is what point are you trying to make with the corporate debt maturing? Um,
This is our interest rate. This is just interest that we're paying on our corporate debt.
is
So
that
the
interest? Is that interest or is that hold on, I can't see. Is that interest or is
federal
that
interest expense. So this is
okay, I see.
interest in billions of dollars. So we're almost at $1 trillion in just interest.
For who? The Fed or for
Yes,
the US government?
the federal government.
And you're saying basically at some point,
At some point,
uh,
you can't satisfy the payment even.
right, the US government can't satisfy the payment, and that's an easy fix. I'll just
I
put
mean,
it this
4 or
way.
5 years.
I'll just put it this way. Though you know where those payments are headed?
Where?
I'm going to show you right now. Those payments are headed for the Fed's balance sheet.
Okay, and then what will that do to inflation? And then what
Uh,
will that do to rates? And that's what we got to deal with. We got to deal with if we print more money, then they can't drop rates. And so we
hold on.
can pick.
I'm gonna
Jerome
pull
Powell
it up
has
here.
even said it. He's even said, I wish that the Congress would do their job and make spending bills that we can agree on. That way that I didn't have to raise the rates. If we can't get them to be grown-ups and they can't drop the rates
All right,
because
here's where the debt
inflation
has
is
been
real.
going. This is where the Fed's debt's been going, right? When they print that debt that's going that you're seeing going up, it's literally going to the Fed's balance sheet. The Fed is literally swallowing, they're buying up the treasuries, right? They're eating the debt up. They're pushing it off today, but they're eating the debt up. That's where the debt goes. And you're basically saying, okay, well, if the Fed comes in and eats it, it causes inflation to go higher, right? Okay, then why haven't we seen inflation until this COVID payment? Why we haven't seen inflation
Because we
this whole
printed
time?
$2.5 trillion. What happens is we were in this $800 billion would fix stuff in '08, right?
Oh, hold on, hold on, hold on, hold on,
$800
hold on, hold on. I want you to focus on this part first. They ate up the debt and we didn't get any inflation. Okay. The average rate of inflation is 2.5%. Right. That's kind of like the medium. You don't want it to go too much higher than that. You don't want it too low. By the way, if inflation is zero, no companies grow. You need inflation.
Yeah, I
Okay.
understand that.
So
We don't need
so
10, 12, 15% inflation. I know that.
right, right. But what I'm getting at here is that it's not the debt going higher that's the issue, right? Because if that was the issue, we would have seen
No, that is
inflation.
the issue. That's
We would have
100.
seen.
It's not about it going higher. It's about
Well, then
what
answer me this. Answer
percentages.
me this. Why didn't we see inflation go above 3% this whole time?
Because it was proportionate to the GDP. It wasn't astronomical to the GDP from '08 to really from 2012 to 2019. It was proportionate. Then, boom, we realized, hey, all I got to do as a government is give everybody $1,200 and I could pass a $9 trillion bill.
No, no. Wait. You just said it was proportionate to the GDP. Does that look like it's
Yes,
proportionate from '08?
money right here, right?
Right,
In '08.
right.
We
Does
printed
that look
800 billion. So it went from here to here. That's printing money. This is proportionate.
you're
This is
telling
not
me?
proportionate.
Right, but you're telling me that bump in '08 was proportionate to GDP at that time.
More proportionate than this for sure.
Sure, sure, it is.
This is more able to stomach. I'm able to stomach this more than I am this as as a business. So as a US citizen, you know, this
Right,
is
right.
our money that they're messing with.
Listen, we agree that 2020 was extreme. We agree on that, right? So I'm
Right.
not disagreeing with that. What I'm saying is you said, okay, I'm saying why didn't inflation erupt above 3% during '08 to 2020 then? Obviously, if the degree of printing was much higher than GDP. As a matter of fact, the trend rate of GDP has been this is a trend, but the trend is very low. Like you're not really getting GDP.
We made one bill to bail everything out, right? So we had an $800 billion bill. We have had tens of bills that are $1 trillion plus in this new government. Over leverages today's fool's gold. The US government is over leveraged. Anytime you can barely pay your interest payment, and that's what you're going for is, hey, I'm going to pay my interest payment. You are in trouble. You're not paying your debt down, which obviously we've agreed we're never going to pay our debt down, but it can't just keep going. We can't be in 5 years having $50 trillion in debt. We can't be in 8 years having $100 trillion in debt. And that's where we're going right now. And that's unsustainable. That is
Now,
for
hold on.
the
Now
government.
using your logic, because for one, I think we both know from '08 to 2020, that is not proportionate to GDP.
No,
GDP is average at 1.7%, 2%. That's way faster than GDP, but we didn't get inflation. I'm going to tell you why. We didn't get inflation because there's one thing that beats inflation, it's productivity. If you can produce services and goods as fast or faster than the amount of money printed per unit of labor, then inflation doesn't rise. And we didn't see that. Stocks rose. We didn't see that because of that. During the pandemic, that big bump, the reason why inflation got so out of hand isn't just because we printed so much money. That's part of the issue. It wouldn't have been that bad. Number two, we had a war a little bit, so oil went up. But the real issue here that's been so systemic is that the supply chains were broken. So you couldn't supply goods or services. And when you have broken supply chains, you don't have productivity, right? You don't have, so in order to make your money as a business, you have to increase prices
Are
because you
you
don't have.
saying are you saying there's no negative cost to printing too much money and
No,
being
no, no, no,
wasteful,
no. I said
and
that's
there's no
part of the
cost to the stocks?
no, I said that's part of the equation, printing a lot of money, but for an economy, they need productivity because we just saw back in, I can't show
But
the.
is there negative to the stocks? So say we're talking stock market.
No, 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 no.
Obviously,
If you're
is
talking
there
stock,
negative?
no, if you're talking stock market and you're printing more money, stocks go higher. I mean, they go way
Right.
higher. Right.
Right. So you think that you can just put all this weight on the consumer and the consumer will deal with it, but these top richest companies in the world will deal with it, and or will absorb the money, and the consumer will just deal with it. Deal with the cars costing 200 extra, deal with your expenses 700 extra a month, just deal with it. And not only that, we're going to print more to make you deal with it more. And you think that you can just squeeze that consumer as tight as you want, and the stocks will keep going. Well, eventually you got to come back to the consumer, because the consumer in any good business, that's who you focus on. And the
Printing money,
consumer is
printing
stressed.
money, printing money doesn't hurt it doesn't affect, it doesn't tighten the consumer. It gives them more money.
No, it hurts the
Yeah.
consumer, because everybody right now would give back $1,200 if they could. We can go back to 2019 prices. That's just how it works, because it costs $700 more right now to live than it did in 1 year ago. Not even, it's probably more like $2,000 less. So everybody would give back that $1,200 if it meant go back to their regular
Well,
prices.
that's because
What
consumers
happens is it hurts
that's
the
because
poor.
that's because consumers spend more. If there's more money, they spend.
Exactly, more in debt. Then they're in the same they're in
But
the
those,
same
but those are
predicament as our government is.
but
They're
but
in the
those
same
are
predicament. And
individual
if you pay,
choices. Those are choices by the individual, though. That printing more money doesn't hurt them. Tightening rates hurts the consumer. Tightening rates hurts the consumer. When you
and you
increase
have to
rates,
tighten rates. You have to tighten rates if inflation gets out of control. If we print too much money, we have to tighten rates.
right? But the
It's
argument
it's
here is
it's
that
correlated.
right. But the argument here is that inflation wasn't caused so much by just well, this is the point I'm making. It wasn't caused by U.S. Debt rising. It was caused because the supply chains broke. Because from '08 to 2020, you didn't have inflation breakout. So it's not debt. It's not debt that made it go up. It's the broken supply chains. It's the lack of production, the
I,
lack
I
of
don't think
productivity.
I don't think it's either or. I think there's a combination of it, but I do think that
Mhm.
it's at least 50-50 if we're going to say those are the two causing factors, because you can't just inflate the economy. You can't just put that much more money into the economy without it hurting the consumer, which we're seeing with inflation.
But we're
Inflation,
talking
I
about the
feel like,
stock market. But we're talking about
I,
the stock market here, right?
but who buys Amazon? Does Amazon just make money just because people buy the stock, or do
Listen,
Amazon have to sell goods?
when you print money, the inflation goes into asset prices. That's what goes up the most. Asset prices go up. The cost of consumers like apples, whatever it is, your food, your groceries, your housing, that does go up. But you know what goes up the fastest? Asset prices. That's why Bitcoin is so popular, because anything that can store value while they print money goes up faster. So the argument I'm making here is people should be investing because that's the only way to capitalize on the debt payments. It's going to go up. If you take off debt printing from the government, guess what? You're going to a third world country. They have to print debt.
Let me
There's no
let me
way
show you
out of
this
it.
chart real quick, Jeremy. I think
All
you'll
right.
like this one. This is a funny meme one. So this is the government right here, right?
Yeah. Hmm.
And then this is their two options, right? We could lower interest rates and cause inflation, or we could increase the interest rates and cause a recession. And I do think that that is, like I say, we can act like they're not connected, but I do think that it's connected. That if you print more money, Jerome
Hmm.
Powell has to keep the interest high. If the interest is high, it hurts companies that aren't leveraged properly, which I guarantee are over 50% of companies that over leverage, think that free money's forever, think all this stuff, and it'll stress the economy. And so,
Yeah.
like, the economy does have a play in stocks. Obviously, people buy consumer goods, so that does. Obviously, there is a portion of it that the economy doesn't have. If we're looking at just, hey, influx money. Anytime we influx money, somebody that is set up to absorb money is going to
Hmm.
do good. So that's what you're talking about, Amazon and stuff. But what I'm talking about, and I think that we're saying similar things, because I
Right.
don't think that you would invest in the 250th best company in the S&P 500, would you?
I'm not going to invest in a company that's affected by how the consumer changes their habits, basically. Yeah. So what I'm looking at is the overall stock market or the assets that outperform. Maybe that's where we're disconnected, which is yes, the stock market's going to be impacted, but overall, over time, it's still going to outrun. The economy can be flat and the market can still go higher in certain segments. And overall, we just saw when the Fed prints money, the economy suffers in some areas, but other areas it does better because guess what? They're going to print that money and it's going to go somewhere. Number two, just because they lower interest rates, that doesn't make inflation go higher. It's whenever you cannot produce anything, and it's when the banks lend money. You can print money, and inflation doesn't happen. We saw that, or else guess what? We'd have saw inflation from '08 to 2020. It didn't happen. Why? Because banks didn't lend as much. And money printing isn't inflation. That's a misconception. Inflation comes when the banks lend out money when they try to make money and they lend to people who can't afford it.
Inflation
Or
is too much money chasing too few goods. Whenever you print more money, that causes
yeah.
inflation. It's 100% what
No, no,
causes.
no, 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 no. Because guess what? We didn't see inflation from that's what I'm saying. You'd have to explain why '08 to 2020 there was no inflation above the 3% level, 2.5%. You can't explain that, can you?
From '08, whenever everybody was it was recession and not
Gotcha.
inflation.
Where's my button at? Gotcha. Explain if that's true, if what you're saying is right, we would have seen inflation, is what I'm saying. So how do you explain all the printing from '08 to 2020, 2019, whatever, and no
Dude,
inflation? How do you explain that?
dude, you went to business school, right?
No, I didn't go to business school. No.
Or you were you in marketing?
No, I got mine in family child sciences. What? Well,
Okay, I
hold
thought we
on. How
did
do
a
you
marketing class together. Sorry. Inflation is too much money chasing too few
how do
goods.
you, bro? How do you explain '08 to 2019? You're skipping my question. You're trying
They,
to
they,
deflect here.
they printed $800 billion, not 2.5 trillion in one year, and then keep going. These chips act, all this stuff that you keep acting like, that's 1.7
No,
trillion, 1.9 trillion, 8.2 trillion. It's tons of money. It's not
listen. From
$800 billion. It's not going to cause the
You're
same
moving
reaction
the
if I
goal. You're
do it.
moving the goalpost from 2008. You're going backwards from 2008 to 2020.
It was
The
eight hundred
hold
billion
on. Let me
dollars that
finish.
we printed off,
Let me
not
finish.
2.5 trillion.
Let me finish. They printed money though. They increased the money supply significantly versus the past. From you have the chart from '08 to 2019. It significantly increased right there. There it is, '08, right? So how do you
This
explain
is
the fact?
significant to you? Look at this. Boop, boop. That's
Yes.
significant. Let me show you what's significant to me. Boop, boop. That's from 6,000% to 8,000, over 8,200,
I'm not arguing that
8,200%.
though. What I'm saying is that in '08 they printed money. You're literally saying, and when you print money, right, significantly
Proportionate,
versus
Jeremy, proportionate. If
that's not
we printed
that's not
$800 billion in 2020, we wouldn't be dealing
bro.
with this